Welcome to your channel, Dr. Gazavi. Economics and financial issues are very important. Let's go.
Gold or Bitcoin, which is the safe? In December 2019, the coronavirus disease 2019, COVID-19, pandemic swept globally and engendered severe casualties and continuous economic turbulence. During this period, the stock price crash risk and oil turmoil are critical for investors. Investors have sought to lower the losses during the market turmoil. Gold is considered as a traditional safe haven asset against extreme movements. However, a few studies report that gold's safe haven or hedging property seems invalid because commodity markets are gradually financialized. Interestingly, some studies have shown that the emerging asset Bitcoin has a safe haven property similar to gold. Moreover, its safe haven properties may be better than gold because it is independent of a country's politics and economics. Lai, Liu, et al., 2021, also state that Bitcoin is a better portfolio tool than gold for risk-seeking investors. Hence, investors may lose confidence in this traditional asset and turn to Bitcoin during the global financial crisis. Therefore, this paper focuses on the following question: which asset is the safe haven during this COVID-19 pandemic, gold or Bitcoin? To investigate this question, we apply the time-varying parameter vector autoregression (TVP-VAR) model to test the safe haven property of gold and Bitcoin. If an asset is unrelated or negatively correlated with other assets or portfolios during an economic turmoil, it can be served as a safe haven asset. This type of asset helps to compensate for the loss caused by the price drop of other assets or investment portfolios under extreme market conditions. Therefore, investors seek safe haven assets to reduce losses caused by the risk. Gold has always served as a store of value and a means of exchange for centuries because of its durable, storable, portable, divisible, and easily standardized characteristics. Because of its excellent physical properties, gold is considered one of the earliest forms of money. Additionally, gold can compensate for losses caused by other assets because of its negative correlation. The view that gold can be considered as a safe haven asset is widely recognized, particularly in the depressed market environment. For example, Gosda and Unelmis, 2014, document that gold is a safe haven for domestic and foreign investors, especially when the stock market declines more seriously. However, evidence suggests that gold's safe haven and hedging property probably disappear because of the co-movement and financialization of commodity markets. The failure of gold's safe haven characteristics at some point led people to seek other safe haven assets. Bitcoin, an emerging asset, is gradually attracting attention. Bitcoin is the original cryptocurrency proposed by Nakamoto, 2008. Since its release, Bitcoin has been gradually accepted as a payment tool in some businesses and areas. In addition to its role in transactions, Bitcoin also has excellent properties from the perspective of economics and finance. Especially since this emerging asset appeared in the aftermath of the 2008 global financial crisis, the safe haven or hedging property of Bitcoin has also been gradually realized by some investors and researchers. An equity portfolio that includes Bitcoin may improve the risk-return trade-off. Bitcoin has many similar characteristics to gold, such as both having apolitical attributes, safe haven property, and independence of inflation, so it is also referred to as digital gold. In addition to some similarities, Bitcoin has its unique advantages over gold, such as being independent of a country's politics and economics, based on accurate algorithms and sophisticated protocols. Hence, Bitcoin will not be affected by the common movement and financialization of commodities like gold. These properties make a comparison of the safe haven properties between Bitcoin and gold meaningful. Especially in the context of the COVID-19 pandemic, the comparison of this property is more interesting. Governments worldwide have adopted many stimulating economic and fiscal packages to reduce depression and limit the unfortunate impact of COVID-19. Various stimulus policy measures may change the relationship between financial markets. The safe haven properties of gold and Bitcoin may be invalid. Given the similarities in the safe haven properties of gold and Bitcoin and the advantages of Bitcoin in terms of independence, it is worth investigating whether gold or Bitcoin can be used as a safe haven for oil and stock markets during the COVID-19 pandemic. As the COVID-19 pandemic has a time trend and the number of people infected with the disease gradually changes, the interactions between various economic variables entailed in this process would change over time. Therefore, the TVP-VAR model is suitable for our study because it explains the dynamic spillover of gold, Bitcoin, as well as oil and stock markets more flexibly and robustly. We can determine whether gold or Bitcoin is a safe haven for oil and stock markets and observe the changes in their safe haven properties. Furthermore, we apply the iterative cumulative sum of squares (ICSS) algorithm to select 4 key time points for the residual sequence to analyze the time-varying effect of gold, Bitcoin, and oil and stock markets at these 4 time points. The ICSS algorithm is employed to identify shifts in the number of new COVID-19 infections, thus obtaining the time points when the number of infected people changes drastically. Different from the manual selection time points, the ICSS algorithm is more accurate and better reflects the dynamic changes in the number of people affected by the COVID-19 pandemic. Further, we do a more comprehensive consideration to get the safe haven properties under these key time points. Our results hold up to a robustness check. Our analysis yields 3 main results. First, both gold and Bitcoin can be excellent hedging tools for oil before the COVID-19 pandemic. However, only gold can be considered as a hedge for the stock market before the COVID-19 outbreak. Second, based on the negative spillover effect during the COVID-19 pandemic, we reveal that gold can be considered as a safe haven asset for oil and stock markets in the short term during the COVID-19 pandemic. Bitcoin cannot. Moreover, gold's safe haven property for the stock market becomes stronger when the pandemic critically spreads. Finally, the key time point impulse effects verify our findings in time-varying impulse responses. Gold can be considered a safe haven asset under the impact of most events, but Bitcoin is the opposite. The spillover effects of oil and stock markets on Bitcoin are positive and different under 4 special events. The contributions of this study are as follows. First, while some studies examine the safe haven characteristics of gold and Bitcoin, merely a few compare the similarity and differences between the safe haven property of gold and Bitcoin in multiple markets, namely, both oil and stock market shocks. Second, unlike some studies on the safe haven property of gold and Bitcoin statically based on the copula or regression approach, we focus on the dynamic changes by relying on the TVP-VAR model rather than the static regression, thus revealing the changes in the safe haven property during the COVID-19 pandemic. Third, some previous studies do not focus on the context of the COVID-19 pandemic. This paper focuses on the number of new infections for the first time to select the key time points using the ICSS algorithm, thereby reflecting the impact of key events during the COVID-19 pandemic. Therefore, this paper comprehensively considers the safe haven properties from the combination of dynamic and static. Gold has been used as a store of value and a means of exchange for thousands of years. It has a proven track record of retaining its value over time and has been widely accepted as a form of payment across different cultures and civilizations. Gold is a physical asset, meaning it can be held in your possession, but it also requires storage and security. On the other hand, Bitcoin is a digital asset that was created in 2009. It has gained popularity as a decentralized currency that is not controlled by any government or central authority. Bitcoin is stored in a digital wallet and can be transferred globally in a matter of seconds. However, Bitcoin is a highly volatile asset and its value can fluctuate widely over short periods of time. In terms of safety, both gold and Bitcoin carry risks. Gold can be stolen or lost, and its value can be affected by factors such as economic conditions, inflation, and supply and demand. Similarly, Bitcoin can also be lost or stolen, and its value can be affected by market sentiment, regulatory changes, and technological developments. Ultimately, whether gold or Bitcoin is a safer asset depends on your individual circumstances and risk tolerance. If you prefer a physical asset that has a long history of retaining its value, gold may be a better choice. However, if you are comfortable with the volatility of a digital asset and believe in the potential of blockchain technology, Bitcoin may be worth considering. It is important to do your own research and consult with a financial advisor before making any investment decisions. Herein, we have studied the impulse response of gold, Bitcoin, oil, and stock markets before and after the COVID-19 based on the TVP-VAR model to determine whether gold or Bitcoin can be considered as a safe haven for oil and stock markets during the COVID-19 pandemic. First, we explore their time-varying impulse responses in different lag periods. Our findings indicate that gold can be used as a safe haven asset for oil and stock markets during the COVID-19 pandemic, but Bitcoin cannot be regarded as a safe haven. Moreover, gold's safe haven property for the stock market becomes stronger when the pandemic spreads critically. Gold's safe haven effect is better for the stock market initially, and the safe haven effects for oil strengthen later. Moreover, both gold and Bitcoin have a good hedging effect on oil before the COVID-19 pandemic, but only gold can hedge stock market shocks prior to the COVID-19 pandemic. Furthermore, we use the ARMA model to eliminate the trend of new infected cases during the COVID-19 pandemic, and then obtain the residual sequence using the ARMA model. The ICSS method based on the residual sequence is used to select the structural breakpoints as the time points of the time-varying effects at different times. Through the time point impulse response analysis of 4 different structural breakpoints, it is found that the impulse response direction and intensity also vary under different events. Summarily, Bitcoin cannot be a safe haven against oil and stock market movements under the impact of the 4 special events. In contrast, gold can be considered as a safe haven for oil only under the impact of more than 90 million people infected worldwide, but gold can against the stock market shocks on the key points, except when the good news about the development of the vaccine was announced. Additionally, gold's safe haven effects against stock market movement are stronger when the COVID-19 pandemic becomes more serious, namely, asymptomatic transmission. The aforementioned key time point impulse effects support our discoveries in the time-varying impulse response.
Thank you for watching, and please subscribe to our channel. Economic and financial issues are very important. See you in the next video.